watching Market Call. We're here with David Burrows. We have Judge in Norwood, Ontario on the line. Judge, what's your question?
Good evening to you, and thanks for taking my call. My question is on Suncor Energy, and I'd like to know if it's a buy and a hold at this time.
Great.
Thank you.
So, Judge, again, we come at things all our own way, and energy is a sector that we avoided from July of 2014 until toward the end of January this year. And through that period of time, the percentage of stocks within that industry performing well contracted and contracted and contracted until everything really was shot. In the end of January, beginning of February, you started to see some improvement there. And so our premise is always try to identify one or two of the companies that you know are going to be there, that have very strong fundamentals, very good liquidity, and ultimately will be survivors. Because I do think that as we go through the next year or two, there's going to be a lot of consolidation, a lot of companies that will go away in this energy space. So we don't have a big position in energy. I would say we probably have a half weight the market from a zero weight. We chose CNQ as our main choice, but Suncor would fit in alongside it. Both of them big cap names that have pretty good resources and great liquidity. So I don't have a problem owning it here. Keep in mind, we have to watch to see if this first leg lift turns into something more. So we are running stop losses on our positions, and if started to roll over and energy started to roll over, we wouldn't hesitate to exit again. We don't expect this as just a V bottom and that we're off to the races. But these companies will have an opportunity to make acquisitions. And I think that that's where the opportunity will lie in a consolidation within the energy patch.
All right, we have Renee in Kitchener on the line. Renee, what's your question for David?
Yes.
Hi, Renee. What's your question for David? Welcome to the show.
My question is the opinion from David of IGM Financial.
Okay.
For long term.
Yes.
It seems to have a good dividend, but you don't hear much about it at any time.
So Renee, let's talk about this in context. We believe we have an improving stock market. We believe that people in general under-own equities right now. Interestingly, people worry about, is this market going off into a bear market? When you look at the level of bearishness or the number of bets people made against the market by short selling, we're basically at almost all-time highs. That's not the way the market behaves at the beginning of a downturn. It's what happens at the end. So if I were to say I want to have exposure to companies that benefit if the market recovers, then we want to look at investment management companies, and IGM fits that bill. Now, IGM has a lot of exposure to Canada and Canadian investors. So it will benefit, but I would prefer to look at something that might benefit more from the US market. So I think you'll do fine in IGM, right? We've been through a tough correction. It probably rallies with the market. But I would be more inclined to look at something like BlackRock, BLK in New York. BlackRock, of course, are the big manager of ETFs. ETFs are growing like wildfire. They have a broad range. They have the biggest market share. They will also benefit from the management fees that they get paid for managing these ETFs. So you might have a little bit more upside there to a market that is maybe more favorable than the Canadian market, but you probably do well in both.
Renee was saying she liked the yield, indeed, a yield of 6.04%. Yeah. We have Joseph in Hamilton on the line. Joseph, what's your question for David?
The Jalan Corporation. It seems like they're making going forward strides better, and then this day and age with cameras and all the rest, they seem to be holding their own. My question on the company is, if they wanted to take it private, would the president, how much of a percentage would he have to take that company private, or why do these companies support themselves by buying their own stock back? So I'll just listen to see what you have to say, because it's a new company and I'm just interested in it lately. So Sure. Thank you very much. I'll listen.
So this is a company, again, that's gone through a corrective period. Stock's based out over the last 6 months. Technically starting to improve. We like the security space in general. Vigilon's earnings are likely to be up about 50% this year and about another 25% the year following. So I think this is one that you can take a look at. It's behaving quite well. It's had a basing out period. As it relates to can the company be taken private, lots of companies have been taken private. We don't make decisions based on that, and I wouldn't want to guess as to whether this is something that could happen. But the stock's behaving pretty well, and I wouldn't have a problem owning the stock.
Okay, we're going to be back with David Burrows, President and Chief Investment Strategist at Barometer Capital, answering your questions about North American large caps. So call us toll free, 1-855-326-6266.